Good evening, traders. Today is Thursday, January 26th. Markets are closed. How'd you guys do today? What a wild, wild day. But more importantly, unfortunately for the Bears, got some bad news for you. Uh-oh. There's the trend line I said I would never draw. And there it is. August 16th trend line broken. And it was not done by pump squeeze like this one was. It's broken. Wick up above the channel and closed well above the channel. Uh-oh. Okay, so we're going to talk about what could become of this heading into FOMC. So stick around for that discussion. Yeah, it's definitely going to be interesting. And at the end of this episode, I'm going to kind of give you the strategy for this weekend, what I'm going to do to see if I can anticipate, map out what old market maker's up to. Okay, but let's get into more intraday action today because that's the fun stuff. All right. Okay, so let's first start off with the Twitter world. A lot of you guys actually made money today. Okay, a lot of you guys actually made money. This tweet, sorry, is actually by the time we had already bottomed. Okay, actually, I found it quite comical because actually, as you see right here, I'm glad I'm scaling into calls. I got more. What I was referring to is I actually got calls at this point. It did go up, right? Now, actually, I got it like right here, like right here. Okay. So we did go up, only to back up to the channel, and I should have thought about that more. I'm like, we haven't taken that channel in 7 tries. You're going to see the next slide. 7 attempts. We haven't even done it. But yet, on this shallow back test, it's going to take it. I thought about it later. I'm like, yeah, that probably wasn't the right move there. So consequently, boom, big red candle. Boom, big red candle. Okay. So this tweet is basically once it's already bottomed, and I'll show you in the next slide. It's a little, well, this one's probably good enough. So right here on the right-hand side is the 1-hour chart. And left here is on the 5-minute chart. Okay. And as I was watching both, and I started to see the MACD cross, right? You see the RSI at no time, even though we had some big red candles down. At no time did it go below the 30 line. That was key. I was like, uh-oh. Okay. And where there was convergence with the MACD, here, see that going down, with the price, the MACD was moving convergently with the price. RSI had slight bullish divergence right here. Higher lows. And as soon as I saw this double bottoming, and then when you look to the right here on the 65-minute chart right up here, see that? When you look there and you look across, like, oh, I can totally see that now. See that? I was like, oh, that's it. RSI also confirmed it. That's the bottom. That's the bottom. Okay. So that was basically the telltale sign. And the 1-hour 65-minute MACD never crossed over. You never had a negative cross. That's what I talk about here. 1-hour MACD, no negative cross. Basically, I sent out the status of what I was looking for. MACD positive cross, RSI mid-range, 1-hour MACD, no negative cross. 1-hour RSI never crossed below 30. It never did. See, so all these things together tell you, oh, market's just trying to scare us. So I actually found that funny because I was actually laughing for a good while. I really was. I was because I was like, well, market maker, you never fail to disappoint ever. You're always going to do something. And I should have anticipated this big of a move because, like I said, this is a huge channel top. And that this type of move down is probably expected. This is an important zone, guys. Okay, so that was on Twitter, and I did tweet this also. I said, hey guys, I did say on this morning's YouTube episode, don't expect them to give up the channel top without a fight. You could expect at least a back test to the 5-minute EMA. Took that to heart and went 100% retracement instead. I was talking about this, right? At least a 5-minute retracement, 5-minute EMA 50 retracement to this. Mark Maker said, "No, I'm going to do you one better. I'm just going to go I'm going to retrace all of last night's and this morning's gains, 100%." So, yeah, it was just funny. It really was when I look back. Okay, but yeah, no, a lot of you guys made money today on Twitter. You guys were tweeting to me. You're like, "Yep, I made this, I made that, I made this, I made that. I got calls down here." I had one gentleman. He scalped this right here. He got in right in here and he scalped it. He sold out right there. But the rest of you kind of got in down here and then you just rode it all the way up for the rest of the day. Okay, so good for you guys. Okay, so this is just to show you how many attempts since January 12th. 1, 2, 3, 4, 5, 6, 7th attempt is a charm. 7th attempt is a charm. Okay? So, there you have it. That's basically what I want to show you. And this is the 65-minute chart. Look over here. No bearish divergence. That's crazy. There's no bearish divergence despite all of this today and all of this yesterday. There's still no bearish divergence. Okay? No bearish divergence. This you can't really count as divergence because that is still 82.52. That's not like, oh, that's not divergence. That's just, you know, I consider divergence something like, okay, you went from all the way up here to like down here. It's like it's clear, but you're still above the 70 line. That's not really divergence. That's just more of maybe just some consolidation or resting, you know. But that's not divergence. In this situation, you might just get a flat run or a small dip. But when you have true divergence, it's gonna fall. Kind of like this. See that? Yeah. If it's true divergence, you're gonna fall. If it's just slight like this, that's more of a dip. Okay, that's the distinction. Yep. Okay, so that's all I want to show you there. All right, 5-minute chart. Okay, basically, you know, from the get-go, it honored the channel top, obviously. Honored the channel top, and look at the weekly expected move. 80 line right here, the green line. Boy, it sure did respect that too, didn't it? From opening bell and came up right up here. It just couldn't take it out. Got rejected and came down. Okay. Also, it respected the 30-minute SMA 20 right here, the gray line right here. Here's the gray line. Check it out. I mean, it found support in pre-markets. It found support when I got my calls in that I got. I don't know if it's a head fake. It just went up and it just got rejected. Okay. So, yeah, 30-minute SMA got honored, was respected. Check it out right here. Here's the 1/8, yes, 1/8 channel line. Oh, this is actually probably the 4/8 because it's so close to the channel top. This is the 4th 1/8 line. The 4/8. Look at that. Found support. Basically, came up from actually it bottomed on. This is the 1-week EMA 50. 1-week EMA 50 right here. Found support on the weekly EMA 50. So that's again, you know, that. Oh no, sorry. This is the 4/8 matrix line. Oh no, the 4/8 matrix line is this dark blue one, this horizontal one down here. Sorry. This is the 4/8 channel trend line that goes parallel to the channel top right here. Okay. So, I mean, basically all of these lines were respected, guys. I mean, there's just no question. Look at that. Come up to it, got resistance, kind of messed around, doing some chop right in here. Boom, took that out. Came up to the EMA, the 5-minute EMA 50, consolidated under there. Boom, took that out. You see what I mean? I mean, just every line today, once again, was respected. Okay? It found support at those levels that I drew out in the AM episode. All right? So, again, this 5-minute chart, look at that. That's not, there's no bearish divergence here, guys. It's going up with the price. Price is going steeper, but it's still going up. You know, RSI going up all the way until the end. So, like, what I mean, what are you going to say to that? This is not something you short, okay? Obviously, right? Not something that's short. Okay, so by the way, what you're looking at right now on this screen is my intraday view of the markets. On the far right hand side here, on this little, it's actually two screens overlaid. Here's a 5-minute chart that I overlay on top of the 1 hour chart, which is to the far right here on this pane. But I want the 5-minute to dominate because I need to see the details. The 65-minute chart on the right hand side just lets me get perspective. You know, like when you look at this, you're like, oh, okay, I see what's going on here. Okay, it's coming down here, right? And it's like, oh, it's got to find support right around this range because this is a steep, right, band of support, right, between the weekly EMA and the 4/8 matrix 2011 line, right? So, yeah, it's got to find support, and it did. It did perfectly. So this helps me keep things in perspective. Like, well, where are we relative to the other channel trend lines? Either here, and here's the midline. So, you know, I think it really helps for me to not lose perspective because, you know, it's easy to kind of lose perspective as you're seeing these giant red candles, like, ooh, that's looking kind of ugly, right? But the 65-minute over here says, nah, take a step back and realize where you are, okay? It kind of helps you, like, yeah, just step back out of the picture frame for a second so you know where you are, okay? Now, you're probably wondering what this pink line is. That's what got me to suspect that we actually passed the August 16th trend line. Because I was kind of looking, I was like, you know, this, when I saw this wick, I just asked myself, I was like, why did that stop right there? You know, I just like to ask those weird questions. I said, why did that wick stop right there? So I kind of started looking up. I was like, oh, let's join it with that. So then I drew this pink trend line. I was like, is that the August 16th trend line? So it turns out it was not, because the August 16th trend line is actually like back here in this area. But it was close enough for me to start asking the questions. So that's what I drew out. I went out to the daily. I said, I want to draw this trend line from August 16th. I was like, I'll be damned. We passed it. Okay. Oh, yeah. All right. So that's what I wanted. That's all I wanted to show you about this one. Okay, I tweeted this one as well. All right, guys. 387.45 down here. This is the hive. That's the bottom of the channel. The top of the channel has now been reclaimed and backtested against. That is now SPY 403. These two levels are now critical. They are important. They are important, right? Because as you saw in the previous slide, this one, 403, it took 7 attempts to take that. That's not chump change, guys. That's not, you know, that's not like, oh, no problem. Okay? So, that's important. Just like the hive was important. You guys remember in early January when the hive bottom was being tested. Oh, yeah, every time you got down to that channel, when you got down to the hive, it had a fierce reaction up. You guys remember that, right? Oh, yeah, go back and look. Go back and look on your hourly charts in early January. Every time it hit the hive, boom, boom, boom. Okay? So, these are now important levels. Key levels to just keep in mind, to mark on your charts or whatever. 403, 387.45. Okay? So, all right. I basically tweeted this out too. This is going to be the battle plan this weekend. I'm going to get with my Elliott Wave chartist and see what he thinks, what conclusions he comes with through his analysis. And then I'm going to do my analysis, and we're going to compare notes. And the game plan is basically this. I'm going to start drawing out more channel trend lines that I've not drawn out before. Higher level, up, higher SPY levels, up. And I'm going to try to predict which one of those trend lines market makers going after. Which one market makers going after? Which one of those is the line that will be the line of demarcation of rejection? Okay, I don't know which one it's going to be yet, but I'm going to try to figure it out. And so basically, I think somehow, some way, market makers going to try to pump the markets up going into FOMC. FOMC, it may even pump it up even more. Pump it up right to whatever line the market maker has chosen as the line of demarcation of ultimate rejection. Because I think once we get there, whatever line that is, it's going to be a rejection point, like big time. Okay, like you saw, for example, in here. Let's see here. In so many times, I easily go back to that right here, right? Like this, for example, point number 4, attempt number 4. Boom, boom. That's what I'm talking about. Okay, I got to try to figure out which one of these upper SPY levels is going to elicit a response like this. Okay? It's going to be one of them. I believe it's going to be one of them. I don't know which one it is yet. Okay? So that's what I'm going to try to figure out this weekend. And I'll share that with you. And going into Monday and Tuesday, before the Wednesday FOMC, Monday and Tuesday will keep giving you hints whether that target, that identified target, is still the target. You see what I mean? I think Monday and Tuesday is going to give you the needed data or the hints that's going to confirm or not confirm that target is really the target. Okay, if that makes sense. So, it's all good stuff, Yeah, I got to figure out which one it is. So, I think at this point, all these EMA lines, SMA lines, weekly expected moves, yeah, that's going to be important too. I really want to know. I'll wait till Sunday to get that number from my Elliott wave chartist. He'll tell me what the weekly expected move is. I think it's going to be wide. Okay, so we'll see. But already today we closed above the weekly expected move right here, 403 flat. 403 flat is the weekly expected move, upper end. We're up here now, 404. But we got tomorrow too. Okay, so we'll see what becomes of that. So that's the game plan. It's still kind of what is it? Ambiguous, vague, because I don't quite know what I'll be looking for until I start to draw out these lines again, draw out the channel lines and whatever, draw it out and I can see it. So right now it's just all conceptual. Okay. And if you'd like to follow me on Twitter, please feel free to do so. And don't forget to listen to your favorite song while you're trading. So speaking of favorite songs, this isn't my favorite song, but so when I realized today that the August trend line was broken, right? The first thing that came to mind was, oh boy, you guys know that cliche, oh boy, the horse is out of the barn now, right? You guys know that saying. And so then immediately, how when you play that word association game where you say, well, the horse is out of the barn, what comes to mind next, right? And so what comes to mind next is one of my favorite movies from the 90s. You guys probably know this, The Silence of the Lambs. Okay? And you guys remember that song from The Silence of the Lambs, Goodbye Horses, right? And so that was the first song that kind of came to mind as I thought about, oh, the August 16th trend line is broken, and now the horse is out of the barn. And immediately I started thinking about, well, I wonder what the bears are just thinking about right now, right? What's going through their mind as they're seeing this happen real time, as the market just keeps going up and up and up, and they're like, and their trend lines are being broken, right? And so, with that, I just want to play that short clip of that song in case you don't know what song I'm referring to. You can look it up on YouTube. Goodbye Horses, Q Lazarus. I'll just play a couple seconds of it. Okay, that's enough of that. Don't want to get a copyright problem. All right. Please give this video a like, share, subscribe, or click to be notified when I release something new. And with that, I'm Agent 000, signing off.